Hi, folks. Dan Bird here today on the 6th of January, first day of the week. And this will be a quick one. The market is still open. It's quarter till 3 on the East Coast, but I won't be around for the close tonight. So I'm going to shoot this out before the close and we'll see what happens. As you can see, my thumbnail here says climbing a wall of worry. And that's what it feels like the market is doing. It's trying to climb higher, but it's got lots of worries, lots of things coming up that I might have some issues with. I'm not a financial advisor. Anything I say is for educational purposes only. It's not meant to indicate a recommendation to buy or sell. And you need to understand your own trading style and risk profile. So let's first, and I have not updated anything yet. I'll do that later tonight. So everything on the homepage still looks the same as it did yesterday, Friday, actually. So nothing's been updated yet. I'll do that later. Let's take a look, though, at the dashboard. Even though it's still open, market's still open. You can see, see if I can zoom a little bit on this. You can see everything is up slightly, but down from where it was earlier in the day. So it had a really nice start to the day, and now it's pulling back. So don't know if it's going to reverse before the close. We've got about an hour and 15 minutes left. But right now there's the Dow, there's the S&P. They all look similar. There's the NASDAQ. The VIX is climbing a little bit higher, still under 17 though. NASDAQ 100 is pulling back. I'm going to look at the Magnificent Seven here in a minute. The sectors, technology is still at the top, and communication services, the two aggressive sectors, are up near the top, and materials is starting to make a comeback. That's where gold is. And the ones at the bottom are all defensive sectors. So that's good news. Energy is pulling back as well. It was doing really well last week, but the defensive sectors are at the bottom. So maybe we'll, that climbing that wall of worry, maybe we will still take off. So you can see here which industry groups: steel, renewable energy, which did well last week as well, semiconductors. NVIDIA actually did pretty well today so far. And then we've got non-ferrous metals, aluminum, airlines down here, which had been doing really well. And then internet, which is where Google is, it rounds out the top 10. So over here on our top 10 combined list, Serve Robotics actually has been doing really well. It took off on Friday and it's continuing today. So that one looks pretty good. WGS has consistently been in our top 10 list every week, and it's making some headway. MicroStrategy has moved up a little bit today, along with Bitcoin, as well as Coinbase also moving up along with Bitcoin. VRT was one that had been doing really well for a while, and then it sold off, and now it looks like it's making a comeback. So VRT, Vertiv Holdings, might be coming back. And IONQ is at 50. It's actually breaking out today. So that's an interesting looking one. Why don't you take a look at that chart just for fun. So right there, beautiful uptrend right there, comes back to the 21 day and then moves higher. Hit it, touched it right there almost exactly, and starting to move higher again. So this one just continues to go up. I am starting to look at the weekly charts more often now, and this one's kind of rolling over a little bit. So it might be ready to move sideways into a consolidation. And if it does, it's something to watch, because if it consolidates for a while, it's going to be in a squeeze. And then when it breaks out, it should break out with some pretty good power if that happens. But it depends on the rest of the market, how the rest of the market does. So let's next take a look at something that a subscriber asked me about: how to create, using stock charts, how to create a scan for the 5 moving average crossing the 21. And this is what I use. So first of all of these chart lists up here are unique to me. This is how I have named them. So for you that are using stock charts, if you have your own chart lists, and this combined 10 is the one that I showed you just a minute ago, this can be downloaded right from my website. But these are my names, so you'll have to replace those with yours, of course. But this is the 5 crossing the 21, these 3 lines right here. So what this says is the 5-day exponential moving average is less than the 21-day exponential moving average. So today, the 5 is less than 21. Remember, we're looking for it to cross, so it still hasn't crossed yet. The next line says the close for today is greater than the 21 moving average. So even though the 5 is lower, the close is higher. That means this usually results in something that's about a day away from the 5 crossing the 21. So it's a little bit early before the 5 and the 21 actually crossed. And then the third line is yesterday's close is less than yesterday's 21 moving average. So remember, this line here says today it's above the 21, yesterday it was below. So this is implying that the trend is higher. It's just about ready to cross. The 5 is just about ready to cross the 21. So let's run this and see what we get. I have no idea what we'll get. 22 names. AMD is in there. AMD has had a significant sell-off. If we look at AMD on the scan right up here, you can see right there, and we'll put the 5 in here as well. So you can see the 5 is below the 21, but the price is above the 21, and yesterday's price was below the 21. So if this keeps moving higher, then one more day and the 5 and the 21 will cross. Now there's lots of things that aren't really very good about this chart. It's below the 50-day, it's below the 200-day, it's below the cloud, it is underperforming its peers. So there's lots of reasons why this chart still does not look good, and it still needs to prove itself. So on the ADX, which I talked about last week, the green one has not crossed the red. The red's still above 25. So lots of things that are still not looking very good at all for AMD. So just because you got that scan that returned AMD is not the reason to start buying it. You have to look at other things too and look at everything in total. Now, it very well could be the beginning, but there's still lots of work to do. If we just drew a trend line right there, not only would it need to get above this trend line, but it would be right at the 50-day and right at the cloud. So it's got a lot of work to do. It's got to get way up here to 150 or so before it really is confirming that it's in a new uptrend. Right now, it is still in a downtrend. And that is shown as well with this is a weekly chart. So the MACD is below 0 on the weekly chart. And if we look at it on the daily chart, you can see it is significantly below 0 as well. So all of these things are implying that that's probably not a good one, even though it did meet the scan. But there's some other ones in here. Here's Coinbase. Here's MicroStrategy. If you look at MicroStrategy, it usually follows Bitcoin. You can see now this one's below 0 on the MACD too, but it's curving up and the momentum is starting to improve. So this one is above the 21. If we look at it based on what the scan was showing, you can see the 5 is not quite crossed the 21 yet, but it probably will tomorrow. So this one looks like it might be just beginning an uptrend, which is also good for Bitcoin. So that's the way that I create my scan for this. Now I'm working on a new scan that I'm still trialing using the weekly instead. So that's this one here, the weekly moving average. And in this case, I'm looking for a weekly close above last week's 21 weekly EMA. And 1 week ago, the close was lower than the 21. So this week it's above and last week was below. So on a weekly chart, these should return ones that are just beginning to start climbing. And you can see there are 13 on this particular chart. There's the names right there. I'm going to actually look at this using ACP, and I'll go over here and I'll close this out and put in the scan. So I'll use that same scan that I just showed you. It's on the daily scan, and it's the 21 weekly. If I run that scan, you can see it's returned 13, just like the other one did. But now I can take a look at each one of these. So what this is going to show me now is a daily chart on the left and a weekly chart on the right. So I'm looking for something above the 21 on the weekly, and you can see that it is right here. I also would like to see something that looks like it's starting to move higher on the daily as well. And ADMA certainly looks that way. So 5 is just beginning to cross the 21, and momentum is going positive. Doesn't have a squeeze over here, but it does have one on the weekly. So that one actually looks good. Here's ARM. I can go walk through each one of these. Actually, I'm going to do this a different way. This is the squeeze daily and weekly. So I'll look at ARM. So looks good on the daily, and the weekly on the right-hand side is just looks like it's been in a squeeze and might be just getting ready to fire, but not quite yet. Constellation Energy, you can just look at them as I flip through them. What I'd like to see is for the momentum starting to move up like it is on the daily. Be good to see that also on the weekly like it was back here. But it's not necessary for that to be the case. On the weekly, which is what the scan was run for, it actually returned these particular names. Century Aluminum, maybe just beginning to start. CWCO. That one actually doesn't look too good to me because there's long tails at the top, which means it's selling off at the end of the day. So it's failing its breakout, basically. CXM actually looks interesting. So here's CXM. It's actually pulled back today, and actually quite a few of them look like this today, frankly, because it had, like I said before, it had a nice start of the morning, but then it was pulling back in the afternoon. So that's CXM. EBS is on the list. There's what that one looks like. It actually looks like it's in a weekly squeeze over here, you can see. So this one, if it breaks out above probably 13, then this might actually run for a while. MTRX. It looks like it is starting to move on the daily chart, and it's right at resistance on the weekly. So it needs to break out of this area right here, about 1350. And if it does, this will be clear sailing above for that one. So that one looks interesting. Powell, our good buddy Powell. So again, pull back. That's a failed breakout. Pull back towards the end of the day today. So looked like it was starting to run higher. And this is the weekly, which also came down and hit the 21 and then bounced and started to move up. But I don't like that daily chart or daily candle on that one. PPC has been on our top 10 list, of course. That one's pulling back today as well. So this looks like a failed breakout on that one. Smart Sand trying to break out right there above resistance is actually a little above that. This is only a $2.40 stock. So if this breaks out above 850, somewhere in that range, then it could run quite a bit higher. But it looks overextended on the weekly side. UEC, which is uranium. Again, trying to break out on the daily, but overextended on the weekly over here. I'd like to see the weekly look more like this, and I might modify the scan. I'll update you when I change these, and I'm going to settle into one that will continue to watch each day. But I'd like to see something that the momentum is starting to break out on the weekly like it is right there. So on that one right there, it would be right about here, which would be at this point over here on the chart. So that's what I'd like to see. And then VNOM, which has been on our list before, again pulling back today. So it's a lot of them look like this today. Actually, let's go over and look at on the charts page on the website. Take a look at the 10-minute chart. This will tell the story for the whole day. So right now we're 1 hour away from the close, and looks like it's continuing to go lower. So it's accelerating to the downside. So here's the open right here, had gapped up at the open, moved up nicely until about noon, and then started pulling back at noon. That dotted blue line is the open for Monday. The red one down here is the open for last Monday. So we're still above last Monday's, but we're now below today's open and sitting right on the 50 and accelerating, it looks like, to the downside. So that's not good. Technology looked like it had a pretty nice day. Financials, fair. Discretionary, flat. Communication services and industrials kind of flat as well. So that's not looking too good for the day if this continues. We'd like to see this bounce, especially in the last hour. for this to go back up. If it continues to accelerate to the downside, then I think the whole market might be in trouble. I was hoping that we might have the rally here this week, but that might not be playing out. So, unfortunately, that's the case. All right, so what else? There's one more thing I want to show you for today. It's also on the charts page, something that I made some changes to down here under weekly trend analysis. So this is the S&P 500. This is a long-term chart. So it's a long-term and a medium-term trend analysis. First thing to notice is this is back here in 22 when we had the 22 bear market, which we might be in for again, but we haven't rolled over yet. And what you'll notice here is where the medium term crossed down here is right where we get a red bar crossing the 21. We haven't had that yet. So that is the first warning sign that the whole market is getting ready for this long, extended, maybe almost a year downtrend. But that has not yet happened, and it's still above the 21. And then actually the long-term indicator was right here. So that was a confirmation that it was going down, but it was already into May before that happened. So this is the risk off indicator here, and this is confirmation here. And then moving back up, you really want the secondary, the long-term confirmation before you get back in again. And you can see it's right where the 21 and the 50 cross at the same point. So it's a pretty interesting indicator. It's one that if you ever want to know whether the market is ready to go through this long, extended bear market like we had in 22, just take a look at this chart and compare the same periods. Now you can see there's a negative divergence on both of these right now. And the other thing too is when this crossed here to the downside below zero, that's not close there yet either. So it's not quite there yet. The NASDAQ is on here, looks similar. So NASDAQ also negative divergence, but it hasn't crossed below zero like it did back here. And it's still above the 21 up here. So not yet, but we'd like to see the market start to move higher here in January. And then let's real quick look at the Russell 2000, because this one is a little choppier. You can see the short term, this is actually a medium term right here. And I added in the ADX down here in this case, just to see where it crosses. And it looks like it's trying to get crossing back above, but it's not yet. It has not, and it's still below 25. So the Russell is still trying to make some headway, but isn't really doing too much right now, unfortunately. Last thing I'm going to look at is over here on the market bias page. We'll look at the S&P real quick. So try to break out above this channel line and got rejected. So that is a failed breakout. That is also a shooting star, and if it stays that way till the end of the day, then it's implying a reversal. And maybe we're heading right back down here to the bottom of that trend line, which is not a good thing to do in the last part of January, because we've got a lot of things coming up, like CPI and the Fed meeting at the end of January. So that's not something that we would like to see. Let's take a look at Bitcoin real quick while we're here. And Bitcoin looks great today. So it is now above this right shoulder. So that essentially, and I'll wait to make sure it stays there, but this essentially will invalidate this head and shoulders pattern because it broke out above it. So it might be probably heading back to the highs up here at 108. Right now it's at 102. So it's broken 100, like I mentioned before. If it breaks 100, especially if it closes above 100, then this head and shoulders pattern is negated, and I'll remove all of these lines other than the support line down here. But the target won't be valid any longer either. So Bitcoin actually looks better than the rest of the market. It usually runs in correlation, but right now it is inversely correlated. So it's running opposite to what the rest of the market is doing. All right, that's it for now for today. That's just a quick one for today. Hope everyone's doing well. And be safe this week. Be careful. If we don't rally this week, then I think we are probably starting into a long, extended bear market for this year. We'll see what happens. Thanks, everyone. Have a great day.